Now that we have learned about the function and the structure of an origination team, let's turn our attention to sales, trading, and research, the sell-side parties active in secondary markets. As a refresher, here's another focused view of our initial organizational diagram. This time, we zoom up on the capital markets, sales, trading, and research portion. These are the groups that we are going to discuss in this upcoming chapter. In our first chapter, we focused on understanding the role, function, and structure of the group that helps corporate clients raise capital by issuing new bonds or stocks. Now we are going to take this process a step further. In this chapter, we will focus on understanding the parties involved in secondary markets, essentially answering the question, what happens after new issues are sold? Once the corporate client gets their money and the securities are in investors' hands, who is involved afterwards? To answer, let's start drawing a parallel from our previous chapter on origination. Origination is to primary markets and corporates, as sales, trading, and research are to secondary markets and the buy side. Together, sales, trading, and research offer their clients with value by providing liquidity, granting access to live market insights from real-time trading data, as well as by publishing deep data analysis and insights on a regular basis. These are the highlights of an entire department's efforts, though. So let's take a look at how each of sales, trading, and research contribute to value creation for clients in more detail. Let's start with sales. The sales team act as gatekeepers to the bank for institutional investors. As a result, the sales team is referred to as the client-facing group. When salespeople speak about clients that they manage, they will say that they, quote, cover these folks. For example, if I am a director of credit sales at a bank and my client base are mainly pension funds, I would say that I cover pensions. In addition to providing market quotes and sharing live market insights from traders, each salesperson will manage and coordinate access to the resources available at the firm for their clients. This ranges from coordinating meetings with research analysts to arranging discussions on markets with traders, as well as onboarding clients to ensure that they have all the appropriate agreements in place to trade with the bank. In essence, salespeople effectively own the relationship with the buy side that the investment bank has. Now, trading. Just as sales team members spend the vast majority of their time talking to clients and essentially facing clients, traders are market-facing. They look at markets all day long. On the odd occasion, they will speak directly with a client to support a salesperson and ultimately sell more business for the bank. However, this is not a regular activity that a trader engages in. Typically, traders are focused on being a market maker, quoting what price and in what volume they would buy and sell securities at to service clients while optimizing profitability for the bank. Last but not least, research. This team supports both sales and trading directly and indirectly. And in this respect, the role of a research team member is neither directly client nor market-facing, but rather a hybrid of both. They have the combined knowledge of their sales and trading team and are sometimes client-facing. Ultimately, they provide value to clients by publishing deep analysis and commentary that is one-off, ad hoc, as well as regularly updated. That said, research will cover whole industries as well as specific companies. This means that they will publish deep analysis on the technology, media, and telecom sector, for example, as well as reports specifically on Amazon and the research team's view on Amazon's credit fundamentals. Finally, one more example of a way that research provides value to clients by publishing deep analysis and commentary is that research analysts as well as associates know market flow from the bank's traders, and they combine these market insights with their deep knowledge of companies and publish trade ideas that are incredibly well informed. Research analysts will know when risk builds up and needs to be sold out of a trader's books, and when combined with their industry and company-specific knowledge, they can generate attractive trade ideas based on securities cheapening or richening due to client flows as well as fundamental change. Let's turn to a visual here. This is essentially what a typical trading floor will look like. Depending on where you are in the world, this diagram will scale with the size of the financial market. For example, in New York, this will be a large football field-like experience to take in visually, say at a Goldman Sachs or JP Morgan. In London and Japan, Barclays and Nomura respectively will also be very large. Given the heavy amount of interdependency that sales, trading, and research have, it's very important that the way that these functional teams are structured and set up physically within a firm is conducive of sharing information quickly, efficiently, and effectively. So taking a look at our drawing here. In sales and trading, each role is the intersection of two parts, function and product. For example, there may be a managing director of corporate bond sales, and then the table behind them will be a trading desk headed up by a managing director of corporate bond trading. There may also be a director of FX sales as well as a director of FX trading in another portion of the room. Now, the division in research is much more macro. The research team is typically product-based. However, at larger banks, it may be an intersection of industry as well as product. Typically, however, it will be just debt and equity. Lastly, on this diagram, you will notice that our ethics wall is right in the middle, which is either a physical wall, large piece of glass, or just a large space that divides the room. And it separates sales and trading from origination so that the origination team does not share private information before it becomes public to the rest of the world. Now, research can sit on either side, but it typically just depends on where there is best space available. Now that we have seen how whole teams are arranged from an organizational chart perspective to physical seating arrangement, let's look at the individual career title progressions in each of sales, trading, and research. In sales and trading, the corporate ladder is structured very similar to investment banking. However, it is important to note that the actual work is dramatically different, with significantly less rigorous use of both PowerPoint and Excel in sales and trading. As the titles grow more senior, the main aspect of the job that changes in sales is that you go from supporting the internal team members and managing the smallest of clients to supporting external clients and managing progressively larger business clients. In trading, it moves from assisting a more senior trader to fully managing your own books and product. In research, by contrast, there are far fewer titles to step through, and the change in daily work echoes similar sentiment. It is also worth noting that this is the one that reverses the title and seniority relationship that we're used to seeing, with analyst being the most senior and associate being the entry level. At the associate level, a research associate will be maintaining large databases and assisting in compiling and analyzing the data that analysts need to produce their reports. Associates will generally produce more internal reports and updates, whereas analysts will focus on producing the rigorous analysis that gets sent out to clients on the buy side, such as trade ideas, in addition to hosting actual in-person meetings with these buy-side clients. Now, without further ado, let's dive right into a day in the life of all three of these units. Starting with sales. On a day-to-day basis, a salesperson's job can be broken down into three key steps. Call buy-side clients, communicate market color, which entails giving market activity and trading insights, and relaying any quotes from traders. These three steps are repeated multiple times a day, and the vast majority of steps 2 and 3 are focused from about 9 a.m. till 11:30 a.m. The remainder of the day moves at a much slower pace. So let's break down the three core steps a bit further by looking at a daily agenda of a salesperson. A day in the life of a salesperson starts with an early AM start. The day kicks off with a morning call with all of sales, trading, and research. Typically, this is a giant conference call where all teams within reasonable time zones will dial in to give updates as to what they've seen in their market the day before, trends, patterns, as well as what they expect today. Next, sales will start calling their clients and engaging in conversations to understand the client's current needs and provide market insights and perspectives, in addition to providing price quote requests. Furthermore, if the client needs any further insights from any of trading or research, the salesperson will take the time to make any introductions and schedule meetings with internal teams on behalf of the client. On a less glamorous note, sales will also ensure that clients are onboarded properly and have all of the necessary documentation in place to be able to trade with the bank. Furthermore, Should there be any trade or settlement issues, the salesperson will navigate and troubleshoot the process for the client. Last but not least, salespeople will take clients out to dinner and drinks to build relationships in a space that is less formal. Now, this is the reason why I have written 5 p.m. or later. The day job, on the desk, usually ends no later than 5:15 p.m., and the trading floor is clear of salespeople and traders by absolute latest 5:30 p.m. However, their next destination is not often home during the weekday, but rather it is to a local hotspot bar or restaurant. They use this time to build a relationship and entertain their clients in order to understand their investment mandates more in a less formal environment. Through the course of food and beverage, topics discussed can range from personal to pitching trade ideas, lots of pitching ideas to generate more and more business for the bank. So in this sense, the day of a salesperson can actually be quite long, albeit not at the desk the entire time. So taking a look at all that we have discussed, you can see that when we say this role is client-facing, it is very literally and heavily client-facing. Now let's look at trading. There are 3 major components to a trader's role: to make markets, respond to clients via sales team, and to work with research and sales to pitch and execute trades that will manage the risk of their trading book for the bank. Traders typically trade one product, for example, government bonds, and they will spend their entire career developing a deep and narrow expertise on this one product. Their days will be focused entirely on understanding their own market and trading the product in ways that optimize bank client business and bank profitability. In brief, there are generally 4 types of trading at investment banks. First, there's proprietary trading, often called prop trading. Second, flow trading. Third, agency trading. And fourth, electronic trading. While we will not be getting into the specific details of each in this course, it is worth noting that the role most prevalent at investment banks is flow trading focused. Now, turning to a trader's daily agenda. It's a bit simpler than a salesperson because by virtue of being market-facing, the trader does not really face any time delays or has to wait on feedback that is anything short of instant. Like sales and research, traders start their days bright and early. Oftentimes, they are there at their desks the earliest. In reality, salespeople really need to be there just when their clients are there. However, traders have to be ready at all times. A trader's morning will be focused on getting up to speed on the latest market-moving headlines and any micro news that will impact their product. Throughout the day, traders will respond to price quote requests from the sales team and work in collaboration with sales to get more risk on or off their books. This is a typical trading day. Last but not least, research. Research is an interesting ground and one that is often in the shadow of the spotlight that is focused on traditional investment banking, origination, as well as sales and trading. What you'll find, though, is a role that combines several facets of each of those streams. A research team's function can be succinctly described in 3 words: to research, report, and project. At any given time, a research associate is doing some combination of these 3 things. Like their colleagues in sales and trading, there are aspects of their job that are both ad hoc as well as regular. The regular routine aspects are driven by corporate earnings release timelines, and this is often called earnings seasons. On a quarterly and annual basis, research associates and analysts dissect, analyze, and form views and opinions with respect to the companies and industries that they cover. However, in the moments in between earnings, research is synthesizing the information that they get from their sales and trading teams to pitch trade ideas and provide deep, detailed analysis on these ideas for buy-side clients. It is important to note that we have been speaking of research in the context of sell side, but there are also research roles on the buy side, and their core functions are the same, but just to a slightly different audience. So with all that said, let's take a run through what you can expect in the day-to-day life of a research associate. A research associate's daily routine can be a long one. On the one hand, during corporate earnings release season, the team must be up and ready to go super early. When I say early, I mean 6:30 a.m. kind of early. Conversely, Because they are neither truly market nor client-facing, they do not have an external force that sort of signals the end or the beginning of their days. In other words, research is neither at the mercy of markets nor clients, and there is a large seasonality to the workflow driven by corporate calendars. Typically, a research associate's day begins with getting caught up on all overnight news and market-moving headlines. Whether it's global geopolitical or more localized news, a successful research associate will be very well informed. Right after, the entire trading floor will kick off the day with a morning call hosted by sales and trading. Research is typically more of a passive participant, listening in and asking questions rather than directing conversation. And if there are any earnings calls or any news that is material enough to warrant a public press conference during the day, research will dial in, listen, and be actively asking questions that will help form their view of how the event may impact stakeholder interest. They'll write up call notes as well, update Excel financial models, and perhaps write investment theses, and aim to get the note out to clients before the end of the trading day. If news or events or calls take place midday instead of first thing in the morning, the note will be out the following day. This will all usually happen by noon, and the day will start to slow down as you put together any marketing materials for client presentations, usually in the form of PowerPoint slides, and you might accompany a salesperson or trader to a meeting or two. That was a lot of information. Let's try and take a step back and sew all the pieces of what we have learned together in this chapter. I'm going to take you through a practical example, a series of interactions that the sales, trading, and research department regularly have with each other and buy-side clients. So here we go. On an average working day, a portfolio manager will be at his or her desk by roughly 8:30 a.m., sipping on a hot cup of coffee while scrolling through any overnight news and reading any and all key headlines that might impact their portfolio. Portfolio managers tend to work in teams arranged by asset class, and they sit in pods of desks that are adjacent to and/or facing each other, so they can talk freely about any news during the day. About a half hour or so later, the phone starts to ring. It's all of the salespeople that cover a pension fund or any other buy-side firm calling and calling to maintain relationships and to see how your day is going and what you're looking to trade that day. A portfolio manager definitely will not take all of these calls. And in fact, if they don't have any risk to put on that day, they may just ignore all of them. But if they do, this is where we step into our full circle transaction. The portfolio manager will listen to some market insights that the salesperson wants to share and perhaps ask some questions on market conditions. If the portfolio manager wants to execute a trade, the salesperson will go ahead and communicate their client's needs to traders. Hopefully the two parties, buy side and bank trader, will have a mutually beneficial transaction. If there are any key topics that the portfolio manager is keenly interested in getting more detailed scoop on, he or she may ask if the bank's research team has published any analysis or reports on the topic. Depending on what the portfolio manager needs, the salesperson will ensure that he or she is taken care of. This is a high-level view of what is done every day, multiple times a day.